Hey guys, Bix Weir, roadrunner.com. It looks like the market is going to close under 2,800, down 1,031. Is this the turning point to get some realism back into the markets? I don't know. Steve Mnuchin's boss was out of town. Trump was in India, so maybe that had something to do with Mnuchin kind of letting some steam off the manipulation. I don't know. The thing is, he didn't let the steam off the manipulation in the markets that are contrary to the Dow, which is gold and silver. And all he did was increase the manipulation there. Great article by Zero Hedge. Gold suddenly hammered by multi-billion-dollar sale. In a free market, if you're trying to maximize the return of your investment and you're looking to sell it, do you dump it, all of it at the exact same time? No, you don't. It looks like our friend Gilson over at the BIS just got the nod, and this big yellow 8:30 Basel time gold prices suddenly plunged on the back of over $3 billion notional value of futures being dumped through the market. Now here's the funny thing. How much money do you actually have to do that? Zero. You don't have to have any money. These are derivatives. These don't go on the books of the Exchange Stabilization Fund. I don't think it was Beno Gilson. I don't think he's not needed. He takes his marching orders from the U.S. like everybody else. Steve Mnuchin was in charge of the game. Stock market went down 1,000 points. Mnuchin does not want you looking at gold, silver, or cryptos. Does not want you looking at gold, silver, or cryptos. Called up the Exchange Stabilization Fund, said, hey, dump $3 billion worth of gold onto the electronic futures market. Boom, done. All the excitement gone. Nothing to see here. That's how the game is played. Silver also got nailed just for fun, just to keep silver down, keep that 90-to-1 ratio going. It is insane what is happening. The orders hit at 14:30 Eastern Time, right as one typically sees margin calls issued. So the timing is everything. The COMEX is in on it. The CME is in on it. The regulators are in on the con. 100%. You got to get that into your head. In the U.S., the regulators are in on the con. So it'd be the CFTC. Got full approval from the CFTC. That's part of the Exchange Stabilization Fund. The people who control it are the Working Group on Financial Markets, the head of the Fed, the head of the Treasury, the head of the SEC, and the head of the CFTC. Those are the guys who say, okay, here's what we're going to do and win. Boom, all of a sudden, nobody's like, oh my God, we can't invest in stocks. So, yeah, let's go to gold. Nope, can't invest in gold. That's going down too. That correlation's been broken. It's all bullshit. It's a lie. They're all being rigged. And then you had all the mouthpieces saying, well, why today? The market was shrugging off everything for so long. Why does it go down today? What's behind today's market plunge? A stunned Wall Street responds. When Apple unexpectedly announced last week that it wouldn't be able to meet its quarterly guidance issued less than 3 weeks earlier, stocks dipped and then almost instantly roared higher, with Apple itself filling the gap from the guidance cut just days before. A far cry from the devastation and Forex flash crash when Apple did the same thing in January 2019. Yet while there was nothing materially new announced over the weekend, if only for those who have been closely following the news of China's encroaching economic paralysis, the collapse of global supply chains and the accelerating speed of the coronavirus offshore, markets finally puked today, and the Nasdaq briefly suffering its biggest intraday point loss in history. At the same time, as tech stocks finally got hammered, the 10-year yield dipped below 1.4%, the tipping point, which according to B of A is a harbinger of both the recession and zero interest rates in the next 12 to 18 months. But mostly a recession, and unless the Fed cuts rates immediately, stocks may not be able to recover their mojo anytime soon. And remember, the Fed is tapering the repos. Now they're hiding it in the back of the FICC, but that's another story. So what did the brilliant market sleuth say? Alec Young, Managing Director of Global Markets at FTSE Russell. We knew for a while that it would slow Chinese growth. Slow Chinese growth? The shutdown of China is slowing their growth? It's a little more extreme than that. And then it would have a negative impact on the global supply chain for any company that sources a lot of their products from China, which is a vast majority of companies, but it's not only just China. Apple, the Apple iPhone, it's 188 countries that need to be flowing commercially to put all the ingredients together for an iPhone. iPhones, I don't think they'll ever start up again. Not like at least the way they were. You want to make some money? Buy shipments, freight containers full of used iPhones. Michael Antelli, managing director and strategist at Bard, said the economic data was overwhelming the virus fears. There was a subtle shift last week in how the market viewed the virus. It was right to ignore the virus in the sense that the human death toll doesn't seem to be on pace to be one of the worst in history. The subtle shift was the market concern about supply chains. The concern now is how do businesses continue to function in a world where borders start to get shut? That's the concern they started to worry about. When you saw the outbreak in Italy and Japan and Korea, if all of a sudden Korea and Japan had to shut their borders down, and now Italy, now it looks like the global economy screeches to a halt. Duh. Quincy Cosby with Prudential Financial. What we saw over the weekend was the path of the virus. You have the duration, how long this is going to last, and you have the direction. And the direction is moving away from China and moving towards areas we haven't seen before. If this were to hit the U.S. in ways, and remember the U.S. is large, in ways where New York City, L.A., and Chicago start to see the number of cases starting to build and folks actually in hospitals and dying, you're going to see people much more nervous. It's a con game, my friends. The stock market went up because Steve Mnuchin was clicking his mouse. He just didn't have the guts to click his mouse today, and probably because Trump was out of town. Trump would have called him up and said, hey, click your mouse. It's that easy. Jim Paulson, Chief Investment Strategist at Leuthold Corp. The 30-year yield last week broke to new lows, and the 10-year yield is on the cusp of that. I think this is bigger culprit behind the sell-off than most appreciate. Dolores Rubin, a senior equity trader at Deutsche Bank. Last week, the news was China was sending people back to work, so containment of the virus seemed to be in place. But the news out of South Korea, Italy, and especially Milan, events canceled out. That's bullshit, by the way. They didn't send them back to work. One factory sent them back to work, and they found 5 new cases as soon as they did, and so they had to shut down the factory again. Nothing is happening to restart the economic engine. Economic engine is dead. Probably we will never restart again. You're going to have to get used to life without certain products. The iPhone, for example. Luckily, Road to Ruta has 2. This is an old one. This is the one I currently use. I was even thinking about going buying a third one. Why? Because that last iPhone model, if you can get your hands on it, it's probably going to be the last iPhone model for a long time. I don't know how long, but a long time. Anyway, yeah. So what did they have to do? Bang, bang. Slam gold, slam silver. Here's the gold slam. Bang, Steve Mnuchin. Good job. Click of a mouse right at that time when the margin calls were coming. Silver, bang. Slam, the silver slam, that's $50 million saved by the bad guys. Remember, every dollar silver goes up, they lose $1 billion. And there's only 7 traders. The top 7 traders lose $1 billion for every time silver goes up. Why do I say that? It's in the data. You guys got to subscribe to Ted Butler. Ted's brilliant. And he's figured out there's only 7 traders, not counting JP Morgan, by the way, because they're hedged. 7 traders that control the vast majority of the silver shorts. Every dollar it goes up from here, they lose $1 billion. That's why they're trying anything they can do to keep the lid on it. Look at that, right there. And where is the CFTC with their thumb up their ass? Not only their thumb, there's a coin out there shows the CFTC literally with its head up its ass. It's a great coin. The CFTC is supposed to regulate the markets. They were never intended to. They were intended to uncover for the criminality within markets. And we saw the silver price. Crypto, I'd say same thing. Same rig job. You don't need cryptos to sell. You can sell it, a 21 million Bitcoin right now if you want. go ahead, go on the markets, try to do it. If you had the backup, like the U.S. government does, obviously, you don't have to have an asset to sell it anymore. Yeah, that's the con, the beauty of the con. Look at Litecoin right now. $6.3 billion worth of Litecoin traded hands in the last 24 hours. And there's only 4.8 billion that's even on planet Earth. And 40 million of the 64 million have not changed a wallet. So only 24 million Litecoin even available. That's including yours and mine. That is insane. Annual rehypothecation 3,000% in Litecoin. Get your Litecoin, get it off the exchange, and put it in your pockets. You're not going to have much longer to do that. Anyway, I have posted on the Patreon channel the full speech I gave in Vegas. If you want to know about the road to Ruta, join the Patreon channel. It's the full speech I gave called How We Got Here and Where We're Going. It's the whole shebang about why all this shit is happening now and why it's about to end. So go check it out. Join the Road to Ruta Patreon. It's Bix Weir, roadtoruta.com. Talk to you later.